Hey, in this video, I want to make a quick review of the ChartGuide Price Action Mastery Toolkit, a TradingView indicator that helps you trade smart and clean using pure price action. First, let's talk about something important: how price actually moves. The markets are designed to move in trends and cycles, they don't just go straight up or down. Instead, they move in waves, creating higher highs and higher lows in an uptrend, or lower lows and lower highs in a downtrend. Most retail traders rely on indicators, but the truth is, many indicators are lagging. They show signals after the move has already happened. Price action, on the other hand, focuses directly on what price is doing right now. And here's the key. This is the same approach used by banks, hedge funds, and smart money. They watch market structure, liquidity, and order flow, not just indicators yet, to understand where price is likely headed next. So let's take a look at the settings of this toolkit. When you open the settings, the first thing you'll see is swing structure. But before you turn it on, you need to understand what market structure is. This is the foundation of price action. In an uptrend, price moves by making higher highs and higher lows. Every time price breaks the previous higher high, that's called a break of structure, or BOS, usually marked in blue. In a downtrend, price makes lower lows and lower highs. When a lower low breaks, that's also a BOS, but marked in red. But here's the key: price doesn't trend forever. At some point, the trend shifts. This is called a change of character, or CHoCH, and it signals that the market may reverse or slow down. So remember, a change of character appears when the higher low in an uptrend is broken, and the price closes below it. This tells you that a downtrend has started and that supply is now in control. For bearish, it's the same, but a lower high gets broken, and the price closes above it, showing that an uptrend has started and demand is in control. There's something important to notice in this example. Every time a break of structure appears, a pullback happens. In an uptrend, after a bullish BOS, price pulls back to the downside before continuing upward. And in a downtrend, after a bearish BOS, price pulls back upward before continuing lower. So every BOS is often followed by a pullback in the opposite direction before the trend continues. So now, when you go into the settings of the ChartGuide Price Action Mastery Toolkit and turn on swing structure, you'll see that it automatically marks everything for you. It highlights the bullish break of structure and bearish break of structure, as well as the bullish change of character in green when the trend shifts from a downtrend to an uptrend, and the bearish change of character in red when the trend shifts from an uptrend to a downtrend. The toolkit plots all the bias and CHoCH points directly on your chart, so you don't have to mark them manually. It saves time and keeps your chart clear. When you turn on Show Swing Points in the settings, the toolkit will automatically label the higher highs and higher lows in uptrend and lower lows and lower highs in a downtrend for you, so you don't have to draw them by hand. But here's where it gets more interesting. In trading, there's a trend inside a trend. For example, in this image, the dots show the main swing structure: higher highs, higher lows, BOS, and eventually a CHoCH when the trend reverses. But look at the blue line. That's the internal trend. This internal structure tells us when a pullback inside the main trend is happening or ending. When an internal CHoCH happens, it usually signals that a pullback has started. But here's something really important about internal change of character. It can mean two different things depending on when it happens. It can either signal that a pullback is starting or that a pullback has ended. So how do you know which one it is? Actually, it's simple. Let's say we're in an uptrend. Price is making higher highs and higher lows, right? Then price breaks the recent higher high. That's a break of structure, BOS, confirming the uptrend is still going. Now, after a BOS, you can expect a pullback. But how do you know when the pullback starts? You wait for an internal bearish CHoCH to appear. It's marked as a dotted line on the chart. When that bearish internal CHoCH shows up, that's your signal that the pullback has started. Now, if you're looking to buy, you don't want to enter immediately during the pullback. Instead, you wait for an internal bullish CHoCH to appear. Once that bullish internal CHoCH happens, now you know the pullback is over and price is likely going to continue up. That's your confirmation to start looking for buys. And it works the same way in a downtrend, just flipped. In a downtrend, price is making lower lows and lower highs. When price breaks a recent lower low, that's a bearish break of structure. After that BOS, you expect a pullback. So how do you know when the pullback starts? You wait for an internal bullish CHoCH to appear. That tells you the pullback has started. And if you want to sell, you wait for an internal bearish CHoCH to appear after the pullback. That signals the pullback is over and price is now ready to continue moving down. The best part? You don't have to draw this yourself. The toolkit marks both swing and internal structures automatically. So just go to your ChartGuide Mastery Toolkit settings, turn on Show Internal Structure, and now you've got internal market structure showing right on your chart. Next, let's talk about the trend tools. Just go to the settings and turn on the multi-time frame trend and trend confirmation. The multi-time frame trend shows you you the trend across different time frames all at once, so you don't have to keep switching charts. Higher time frames show the bigger swing trend, lower time frames show the smaller internal trend. And the trend confirmation line is super simple. Green means the trend on your time frame is bullish. Red means it's bearish. It gives you a quick way to check if you're trading with or against the trend. Liquidity is what fuels the market. It's where stop losses are sitting. Big players push price below lows or above highs to grab that liquidity. The toolkit marks these sweeps automatically. For example, if price is making lower lows and lower highs and trend confirmation shows bearish, wait for a liquidity sweep, marked in red, but don't enter yet. Wait for a bullish change of character, marked in green, after the sweep. That confirms the reversal. Now you can enter and follow price as it moves up. Now we're coming to some more advanced trading topics: order blocks and fair value gaps. Let's start with volumetric order blocks. Go to the settings and turn on volumetric order blocks. You can also choose how many of the latest order blocks you want to see. By default, it's set to 5. So first, what's an order block? An order block is a price area where big players, like banks or institutions, place large buy or sell orders. These zones are important because price often reacts or reverses when it comes back to them. The toolkit doesn't just mark the order block, it also shows you the buying volume and selling volume inside that block. And it even tells you how much of the total volume that block represents, giving you an idea of how strong that zone is. This helps you not only see where big orders were placed, but also how much interest there was from buyers and sellers in that area. Now let's talk about fair value gaps, or FVGs. Go to the settings and turn on fair value gaps. You can also choose how many recent gaps you want to see and whether you want them to extend forward on the chart. So what's a fair value gap? A fair value gap is an imbalance in the market. It happens when price moves so quickly in one direction that it leaves a gap between candles, meaning not all orders were filled in that area. Price will often come back to that gap later to fill it by grabbing those resting orders before continuing in the main trend. The toolkit marks these bullish and bearish gaps automatically. This helps you spot areas where price may return and reverse, or where it might just pause before continuing. You can use fair value gaps as potential entry zones, targets, or areas to watch for reversals. Earlier, I already gave you one example, where you wait for a liquidity sweep, then a bullish change of character, and that gives you a strong reversal setup. You can combine tools like swing structure, internal structure, liquidity sweeps, trend confirmation, order blocks, and fair value gaps to build your own personal strategy that fits your style. Let me give you a few more examples to show you how a full trade setup can look like using these tools. In this first setup, we see a bullish order block form. Price comes back to retest the block and holds. After that, we get a break of structure, BOS, confirming the uptrend. Entry is taken right after the BOS. The stop loss is placed below the order block, and take profit is set at the next high volume order block above. This is how the trade went, and it's a possible outcome. In the second setup, the trend confirmation line turns green, and all time frames in the multi-time frame trend table align to the upside. This confirms strong bullish momentum. After a break of structure, BOS, we enter the trade right after the BOS is confirmed. TP1 is placed at an order block with 23% volume, which sits lower. Price is likely to just move above it, so we secure some profit there. I personally closed 20% of the position at TP1. TP2 is placed at a higher order block with 34% volume, which is a much stronger level. Here I close the remaining 80% of the position. As you see, combining trend confirmation with break of structure and multi-time frame alignment creates a high probability trade setup. In this setup, price aggressively moves upward and leaves behind a bullish fair value gap. Later, price returns to fill that gap, which often happens when the market is rebalancing. Instead of entering immediately, we wait for an internal break of structure, BOS, inside the FVG to confirm that the pullback is over. As you see, combining fair value gaps with internal BOS gives clean entries and strong continuation setups. And here is how the trade went. Alright, so that's how you can use the ChartGuide Toolkit, from structure and CHoCH to order blocks, fair value gaps, trend confirmation, and liquidity sweeps to build strong, high probability trade setups. When you combine these tools together, they give you powerful setups. The examples I showed you are just a few ways a clean setup can look when everything lines up. The cool part is, you don't have to follow one fixed strategy. You can take this toolkit and build your own profitable strategy that fits your trading style. And that's it for this video. If you want to go further, feel free to join our Discord. There you'll get access to free tools and connect with other traders who are serious about improving. And if you're ready to start using the ChartGuide Toolkit, head over to chartguide.co to get full access. If you found this video helpful, give it a like and subscribe to the channel if you want to support me. I really appreciate it, and see you in the next one.